Can my employer add to my flexible spending account? Have you ever wondered if your employer can contribute to your flexible spending account? The answer is yes, they can. Employers have the option to add funds to an employee's flexible spending account, also known as an FSA. This can happen in a couple of ways. For instance, they might match what you contribute or even provide a fixed amount, often referred to as seed money. These contributions from your employer are separate from the money you set aside from your paycheck. Importantly, they usually do not count against the annual contribution limit set by the Internal Revenue Service. For example, in 2024, the limit for employee salary reduction contributions is $3,200, which will increase to $3,300 in 2025. However, employer contributions typically do not reduce this limit. Many employers choose to contribute up to $500 to employees, FSAs, regardless of whether the employee adds their own funds. Beyond that, they may match employee contributions dollar for dollar. So, if you decide to contribute $600, your employer could add an extra $500 plus match the remaining $100, depending on their specific plan. However, there are some important things to keep in mind. If your employer allows you to receive their contributions as cash or a taxable benefit instead of adding them to your FSA, those amounts could count toward the IRS contribution limit. This is because they would be treated as salary reductions. Additionally, employer contributions must follow tax rules and non-discrimination requirements. This means contributions need to be fairly distributed among employees to avoid any discrimination issues. The total benefits from the FSA, including employer contributions, must also meet certain IRS rules for the plan to qualify as an accepted benefit, which affects tax treatment and eligibility. From a health insurance standpoint, employer contributions to FSAs can significantly enhance your ability to cover eligible medical expenses. This includes costs like copayments, deductibles, and other out-of-pocket expenses, all using pre-tax dollars. This not only increases the overall value of your health benefits package but also helps you manage healthcare costs more effectively throughout the year. In summary, employers can and often do contribute to employees, FSAs, either as a fixed amount or through matching contributions. These contributions generally do not count against your IRS contribution limit, thus increasing the total funds available for eligible medical expenses. It's a good idea to review your specific plan details during open enrollment to fully understand your employer's contribution policies and maximize your FSA benefits.